You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 20th day of November, 2019. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, you'll see a big microphone. Click it, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry. Simply grab any internet-connected browser and point it to cfrn.net/live, and there you'll find a live real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. The added benefit, of course, logging in via the big microphone, etc., yada, yada, is that you have access to the chat box. I don't monitor the chat box on the live stream. I monitor the chat box that you have access to when you log in through the website, okay? Either way, you get the live stream, but if you have questions, you want answers, take the first option. Okay, let's put a chart up. Let's go S&P 500 E-mini Futures, 4-hour chart. You see here our monthly trading zones, our weekly trading zones. We've published since December 14th of 2009. We're coming up on the 1-year or the 10-year anniversary of our weekly trading zones. To celebrate such a momentous event, we bring to you the monthly zones. Okay? Just like the weekly zones, once published, we don't massage them, we don't manipulate them. They are, in fact, carved in stone for the entire month. Here's November 1st. We sliced through this monthly zone, held it on a pullback, made the run to the zone overhead, consolidated, basically from 6 a.m. November 4th through same day, 2200 hours or 9 p.m. 10 p.m. for you civilians. And then in one 4-hour candle, we made the trip to the zone overhead. We spent 10 days moving from zone to zone to zone to zone to zone to zone. You get the idea. Up until November 14th, 6 p.m. Eastern, Globex open. We not only left this zone, we broke this little trend line, and that sent us up to a swing high at get this out of the way. There we go. It took us to a swing high. The zone 3095, the initial swing high 3095.75. I'm sorry, 3011 half. Retracement. Another leg. Took us up to 3127.75. Retracement. Another leg. Took us up to 32 1/4. Leg, retrace, leg, retrace, leg. Deeper retracement. Pulled all the way back to basically, well, 3104 half. And now we're attempting to build another leg. The only obstacle in our path between where we are right now and the highest monthly trading zone would be this obstacle right here. If we can get on the other side of that obstacle and hold it on a pullback, then there's still about a 6-7 point run on the upside to that zone. The distance from where we are now at 3116, it's going to be 12, 14, 16 to 31. It's about, we'll call it 15 points. So 15 points to the obstacle, and then a potential additional 7 points above the obstacle as we seek out the only monthly trading zone that has not yet been touched in the month of November. All right, on our daily chart, quick peek. Here's daily. See, let me get some of these fibs out of the way. I'll get these out of the way for now. Okay. We hit a Fibonacci price extension overhead, 50% extension, which coincided with a weekly trading zone, It appears the market is looking for a retracement back to the BBC so that it can begin that next leg up. Okay? This is the all-time historic high at a weekly zone at a 50% Fibonacci price extension on the daily chart. Okay? All right. Real quick, just a little bit of news. This is kind of a big deal. Federal Reserve Chairman Jerome Powell has said his institution, the Fed, is looking into the possibility of developing a central bank digital currency. You'll be hearing a lot about this, so when you hear the acronym CBDC, that's what they're talking about. In a November 19th letter yesterday, responding to questions from lawmakers Representative French Hill, Republican from Arkansas, and Bill Foster, Democrat from Illinois. Now, they wrote this letter in late September. Powell responded to it yesterday. Powell said the Fed has noted the efforts of other nations to explore a CBDC option and that it continues to carefully analyze the costs and benefits of pursuing such an initiative here in the U.S. In their letter to Powell, Hill and Foster had expressed concerns over the potential risks to the dollar if another nation or private company creates a widely used cryptocurrency, and asked whether the central bank is looking to pursue such an option. While the U.S. Central Bank is looking at whether a fully digital dollar would offer benefits to the U.S., Powell said the Fed is not actively developing one. Further, a digital national currency may not offer advantages to the U.S. in the way that it does other nations. As an example, some countries have seen a rapid migration by consumers away from cash, while demand for cash in the U.S. remains robust. Similarly, according to Powell, payment systems in some jurisdictions may be slow and unreliable, and a digital fiat may offer an improvement for consumers. On the other hand, payments in the U.S. are innovative and competitive, and consumers have no shortage of options, according to Powell. Introducing a digital dollar would also raise important questions regarding law, monetary policy, financial stability, regulation, and operations. For example, would a general purpose CBDC be classed as legal tender, and what are the rights and obligations of participants in such a system? The digital dollar may also raise concerns about privacy and IT security if, unlike cash, all the Fed must do is maintain a record of all transactions made with the CBDC. Ushering in the new technology would also mean there would have to be decisions made over whether the digital currency would earn interest and would its supply be capped. Overall, Powell concluded that the Fed has not identified potential material benefits of a general purpose CBDC to the implementation of monetary policy relative to our existing tools yet. But they are on an R&D mission. Okay, let's go to the numbers from around the world. I mean, step back in time. Just step back in time mentally for a moment. Remember the original talk about Bitcoin and crypto, and is it real? Is it a joke? What's going on? Who would ever believe such a thing? What fool would put their money into such a thing? In the span of just a few years, we've gone from, is it real, to the Federal Reserve discussing the possibility of issuing a United States-backed digital currency. That bells for the world. All right, numbers from around the world. Here we go. Let me get some fresh data. We'll start here in the U.S. These are the cash markets. Currently, the Dow is down 69 points. NASDAQ down 12. S&P 500 down 5. Russell 2000, a couple of ticks positive. Not even a full point yet. In the commodity basket, and we did have crude oil inventories today, crude oil up $1.89, trading 57.10 last. That's a gain of 3.5%. You'll see that at the pump soon. Gold, on the other hand, down $6.20, trading 14.6810 last. In the Asian markets at the close, Nikkei posted a loss of 144 points. Shanghai lost 22. Hang Seng snapped their winning streak, posted a loss at the close, 204 points. And in the European markets at the close, FTSE down 61, DAX down 62, the CAC down 15. That gives us a red day in Asia, a red day in the UK. So far, thanks to the Russell, it's still a mixed day here in the US of A. Is the Russell leading the charge to the upside? Or does it still need to catch up with the others? Yesterday, the Russell ran a decidedly different race than the other indices, dancing to the beat of a completely different drummer. We'll keep an eye on it throughout the session and throughout today's show. Let's go to Michael right now and grab a recap of what happened in the live training room. When I come back, we'll talk Concierge Trade Alerts, Logic 247 alerts. We'll talk to John if he's around. All that.
Did John ever show up yesterday?
Answers to your questions. I couldn't tell you because I left.
Yeah.
I don't know.
I know. I don't think he did.
Yeah.
I don't think he did.
He's really going through some conniptions with this new supercomputer that he has. So, yeah, I'll jingle him and see what his plans are while you're doing the recap.
Okay. All right.
Okey-doke.
Here we go. All right.
All right. I got your charts.
Okay.
Lock and load. I'm hitting mute on my end. It's all yours.
Okay. Now I'm going to do something a little different today because I did it yesterday and it was beneficial to people. So, and I did it again today and it was beneficial to people. Okay. All right. Well, I mean, it's just measured moves. It's nothing you don't know. So, all right, here we go. All right. Good afternoon, everybody. Today is Wednesday, the 20th day of November, 2019. The markets were a mess today, but we managed to grab a bunch. And you see, this huge leg down here in gold was just pushing the low down the whole time. So we couldn't take anything out of that. Now, if you were to look at our trade setups in hindsight, there'd be one here, there'd be one here, there'd be one here, there'd be one here, where you could have taken your goal for the day. Now, let's just talk about what we did do. All right. It started out really choppy. We're going to break even on our first trade that ended up moving up. And then the next trade on gold, we picked up 8 ticks over here. And I was saying this morning that it was a retracement. Okay. That it was just a retracement. And that's what it is. Just a retracement. And this right here, I believe is almost exactly a 50% retracement. In the morning session, drawing tools, not your retracements. Why is it going the wrong way? There it goes. Okay. See that? 50%. In the morning, I was saying that this is probably just a retracement, and after a huge leg like that, if you look at that on a larger time frame, we'll go. I like the 15-minute. This was that leg right here. Okay, and since then it retraced all the way back up halfway, and then it's just been chopping around. I was telling everybody this morning that don't expect too much out of this. Expect it to get to the swing high, which it did, and that's where we took profit. We took 8 ticks profit on that, and then it started going down again. During the break, there was a little bit of opportunity on the downside. Right here. Nope, just one opportunity on the downside. But we ended up with 1 break even and 1 +8 this morning. Okay. The euro, I don't know why, but the euro gave us opportunity today. The first trade we took here on the euro was right here. It was a close above the trend line. And we picked up 8 ticks on that one. The next one was over here. It was a short, and we picked up 8 ticks on that one. Now, the thing I wanted to show you was the measured move. Okay, and I showed you this yesterday, and I'll show you it again today. See this move from there to there? And this move from there to there. Now, I had drawn that line in, drawn that line and that line before price even got there. But that's a measured move. Okay. And take from it what you will. But once you get there, there was nothing else here during the break. Okay. There was no reason to trade anything in here during the break. Okay. And let's go to crude oil. Now, my number for crude for the week, I'm telling you this right now, is 55.32. So the puts are pretty cheap right now if you're going to buy one. And I know some of you guys are already in it. And look, we're at 57.32 right now. And I think we're going to drop $2 over the next week. But right now, for some reason, crude oil is moving up. What we did with crude today, let's see. The first trade on crude was right here. We picked up 5 ticks. And then over here, we picked up 6 ticks to put us at +11 on crude. Okay. Now, I know that doesn't sound significant, having 11 ticks on crude. But if you have 10 contracts on, that's $1,100. And it was 11.15. So, not a long day in the office if that's what you're doing. Okay. On the ES, we didn't have anything today. Sadly, the ES was just a mess. It just went sideways. Okay. On crude though, during the break, well, really, if you're doing the trade setups, the Tuesday trades, there was opportunity. But if you're not doing the Tuesday trades, then there was nothing during the break. Nothing at all. And that was the whole morning session, right? We had 6 trades, 1 crude for 5 ticks, 1 crude for 6 ticks, 1 euro for 8 ticks, another euro for 8 ticks, and 1 gold for 8 ticks, and 1 gold break even. That was the morning session. Now let's go here. If you have not taken the free trial and you want to take the free trial, go to the homepage at CFRN.net. Right here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page where all we ask for is your name, your email, your phone number. Click on register now. Once you click register now, you'll be sent a confirmation link. You must click on the confirmation link. Okay. You must click on the confirmation link. If you don't click that, we don't know that you took the free trial. Okay. Bring that back over here and get this back over here. All right. So this spreadsheet goes back over 6.5 years. It's our daily results. 6.5 years. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 20th day of 2019. 20th day of October. November 2019. And today we made 16 ticks on the euro. We made 11 ticks on crude. We made 8 ticks on gold. That put us at plus 290 on the morning session. Okay. And that's 2 hours with one contract. Okay. Today it took 26 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 6 trades today. On the month now, we're at $2,106. That's over 14 days, averaging $150 per day. Now, again, that is one contract, 2 hours per day. The goal is to get you to 20 contracts, so that would be $3,000. But you got to work your way there. All right. On the year now, we're at $32,892. That's over 211 days, averaging $155 per day. Again, that is one contract, 2 hours per day. And I miss most of the trades, so you should be doing better than that. Okay. Let's see. Go back. Well, no, I guess with that, we can go back to fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready, you can take it back. Okay.
Here we go. That should do the trick. Okay, recap with the
There
recap.
you go. Okay. The recap. 26 minutes, 2 trades, $100.
That's a good bingo.
And a lot of other guys got up before me today.
Well, congratulations. This bell's for y'all.
It was a good
All
day.
right. I spoke to John.
Okay.
He sends his apologies for being late yesterday, but he said he'll be here. I told him to give me about 15 minutes, and so he'll be here. Okay. All right. Charts. Let's do charts. All right. One last glance at the 4 hour. In fact, let's do this, and this, and this, which will give us this.
Did you go to the imported section? Right click again and go to the imported section.
Okay. Indicators, imported.
There it is. That's the one.
Okay. Now I'm already on a 4 hour chart.
Yeah.
So
I
we're
know.
looking at a 4 hour. You know, that's a good point. What's my variable for the 30-minute? 6?
Yeah.
No.
Well, no, it'd be 2, 4, 6, 8. It'd be 8.
Okay.
No.
Oh, I'm gonna. Oh, that's right. I've got them loaded on my other platform. Okay, but the point, Michael, we're going to make here is I'll just show you the point. It's right here. Here. Okay. Currently, the 30-minute BBC, the thing I've hung my hat on for the past year, is at, you see right over here, 3112.73. 3112.73. point. Right. So the 30-minute and the 4-hour BBC are almost identical. In fact, let me show you another look. Let me do this. ES. Let me switch this to 4 hours. Okay. Let me unscramble the mess. Okay. All right. That is okay. Okay. So I want to peel off this one. Okay, and this one I want to leave. Okay. All right. So I'm going to show you a 4-hour chart that has, it's a 4-hour chart right there, 4-hour. So the 4-hour BBC and the 30-minute BBC, as we just discussed, are aligned. Okay. No, I'm sorry. Yeah. Well, these are both the 4-hour. Okay. What I wanted to show you was the 30-minute. Okay. So where's price now? Price has gotten above the 4-hour. It's gotten above the 30-minute. So other than red and falling, sitting right on top of it, there's no real obstacle to overcome. Now the swing high of this candle here, swing high 31.1850. So if we trade, let's say 31.20, then a scoot right up to 31.25 looks quite doable. So 31.20, 31.25. Now you don't really run into this obstacle until about 31.29, 31.30. However, the folks that sold this down back to support at the BBC, they're probably still camped out here, ready to whack the mole again because it was profitable. There'll also be those traders who somehow missed this move. They'll also be parked up here. And as price approaches, they might come in early because they don't want to miss it again. If enough of them come in early, price won't actually get to this swing high. Now, if buyers are more motivated than the sellers in the order flow, they'll duke it out, and whoever's the most committed to their positions, buyers or sellers, will either take this thing up into the end zone or the monthly trading zone, or they'll send it back down to the BBC to test once again for support. If support fails there, on the way down, we've got an obstacle right here. And if the sellers can get through that obstacle, they'll target the zone below 30.95. Okie doke. All right. Yeah, thanks for doing that. Thanks for getting that indicator working. I appreciate that.
Yeah, I still got to get the whole package together.
Okay.
John's in the room, by the way.
Okie doke. Okay, guys, we're going to talk to John right now because we missed talking with him yesterday. And after John and I talk, I'll go through the Concierge Trade Alerts from last night, as well as the Logic 247 alerts. And then I got something else I'm going to share with you. So, John, take it away.
Hi, thanks. Great to be here as usual. Sorry I missed you yesterday. I've just been getting things set up. I got everything working now, thank God. Everything's going gangbusters.
So are you actually, the new machine, is that the one that you're sitting at, working at right now?
Yeah.
Okay.
Yeah. There's one small issue that has to get fixed, but probably be done this afternoon. But other than that, it's working great, and it's very stable. It can handle everything that's thrown at it. You know,
Nice.
tens of thousands of symbols coming in at the same time. It's terrific. So a lot of drama getting it set up, but when you get a computer of this caliber, you think you just switch it on and everything's going to work.
Right.
That didn't work out. Must have had a rough ride on the shipping or something, but we got it fixed.
Good.
So it's kind of interesting. The market. We really have had one of the best earnings periods ever. And there was a little bit of a pullback in the last couple of days because Home Depot kind of disappointed a little bit. The retailers got hit yesterday. They became roaring back again today because Target is dramatically higher. It's making new all-time highs. It's up about $15 or something like that. And Kohl's also, I think, is up big. So this probably bodes very well for continuation of this rally. Not necessarily today, because we're a little bit vulnerable to a further pullback today. Unless we can if we get back to the highs of the day, that would be very bullish, frankly. But there's a little bit of pressure, on the market. We did get up to positive on the Nasdaq. We're negative again. You have to be very careful of these days when the market kind of comes in lower. Remember, we were down 40 or so at the worst point last night or this morning. Right. We cut those losses in half, and then, to be honest with you, I thought the market might tank because this guy who's testifying looks like a few things came out that might have hurt the market, but instead the market rallied. So it seems to be ignoring this thing at the moment. However, the fact that we've gone negative, just a sec.
All right, guys, in the S&P.
Sorry, no, it's okay. So, we are look. There's a few things that are going on. Like I say, when the market goes positive and then negative again on a kind of recovery like this, you got to be very careful. The Dow it's kind of positioning for another move up actually at the moment. So I'll be back to you in a second. Okay.
All right, John.
Thanks.
All right, guys. S&P. Concierge Trade Alert from last night. Consider being short, 3108. We had a trade to target right below us. These are current weekly trading zones. Trade to target, 3105. Why? Because that's what price does. Price goes from zone to zone to zone. Always. Price is always trying to find the next weekly trading zone. Either the one overhead or the one below. I have 10 years of historical charted evidence to back that statement up. Go ahead, John.
Yeah. So look, if we do continue this little rebound effort, which is a little bit questionable right now, that would be a good thing. We started a correction a couple of days ago. What bothers me is the daily has a look of a top, possible double top.
Let's take a peek at the daily. Yeah. In fact, I'm going to go ahead and just switch it to the current contract for this conversation. Come on. There we go. Right.
Yeah, you can't see it so well on that. I don't think it's a big deal. It's a sort of a 2-day pullback there on the dojis. If we continue higher, and take those out, the market could really accelerate actually from here. So that trend line is still intact, and it's the same way pretty much on the Nasdaq. The other thing is this morning, the mid caps and the transports opened lower, and they're actually recovering right now. And the mid caps are actually positive. They're the only groups that's positive today, mid cap and the Russell. So that's quite interesting. Sorry, that's just the Russell. It's not the mid cap. The futures is still a little bit negative, but that's pretty impressive the way they came back this morning. Really strong. So that potentially implies that we're going to go higher because. Jeepers, when these things are leading the way, you really have to be. You don't want to be shorting. You want to be careful. So, remember we talked about the coffee. It's crazy. We dropped down. We got up to about 112, came back to 106, and I looked at it this morning. It seemed to be reversing nicely. It's up 4 already on the day. It's right back up towards the 111, 112. So it looks very much like coffee is the bottom is in on coffee. Unless I would say if we took out 106 one more time, I might change my mind. But certainly coffee and cocoa are acting really well. Remember, and the orange juice has been, creeping higher. The sugar has been moving higher. Sugar used to be a big deal, and as far as an inflation indicator today, because of the sugar situation, where less and less sugar is being used everywhere, this may be is probably going to go the way of pork bellies. One time pork bellies was the most heavily traded commodity. And
what changed that?
I don't know. Probably the processing and the way it's kind of crazy. It's hard to put your finger on why it happened, but contracts do die. Not every. It's this sort of a lack of interest. Sugar
Yeah, I mean, and some you're right. Some contracts never even get off the ground, so to speak. They just never develop
one thing
much of a following.
I just happened to catch the an interview with the CME head of the CME yesterday, and they're going to introduce options on Bitcoin, and I think that could be a big deal. That could actually reignite the Bitcoin sometime in next year or going into the end of the year. Probably want to watch it in December. Remember,
Bitcoin right here, John. Bitcoin US dollar. This thing's dropped $1,000 in the past week and a half.
Remember, look, we don't know whether the last rally was a dead cat bounce, and whether we're going down in the dumps again, or whether we. I would say if we probably get back over 10,000, it probably means that we're going to, we're probably going to have another run. But the way we've come off and the way each rally gets sold is not particularly encouraging right now. But obviously, an upside breakout from around here could be the beginning of a whole new uptrend. And given the interest in gold and look, the other thing is the Fed met with Trump a few days ago, Fed chief. They're talking about the dollar. They probably want to lower the dollar to make the U.S. more competitive. I think that's probably going to start to be a big theme sometime fairly soon. The British pound is right up there, trying to push 130. Boris Johnson has about an 18-point lead at the moment. And we're only we're about 3 weeks away from the UK election. So if this continues, he's probably going to win with a pretty strong majority and a landslide, maybe. And just that confidence might help.
Here's the pound.
Right. I think we can all agree that if we start hitting 132, 134, got a pretty good shot at going up to 140. And obviously that would impact the dollar. The certainty of, and by the way, look, Europe. We've commented on Europe being quite strong, and it's a little bit weak today. It's weaker really percentage-wise than the Dow is, than the U.S. markets, but it has been pretty strong in the last for this rally, and that kind of leads. A few months ago, we were reading about BMW. We're losing sales and things. We're starting to break down now in this market. That's a bad development. This actually could be a significant high.
We're looking for a pullback, John, into this area right here, about 3070/75, right there. Got a 24% fib retracement and the BBC. So they're calling like a magnet.
Yeah. So, but I think with the UK election and potentially that could lead the European markets higher, and a weaker dollar would probably help the euro, and maybe I think the more certain look. winning, if Boris Johnson wins by a substantial majority, it's got to be positive for the UK. It's got to be potentially positive for the pound, and it's potentially positive for Europe because it gives him a stronger voice in Europe, I think, and it also gives him the ability to negotiate a deal with the US. So it's all pretty positive. And Trump came out with this thing yesterday about, I think it was yesterday or the day before, about raising tariffs, and that kind of knocked the market down a bit. So, you've got to be, with this market, you have to be on your toes all the time, because if somebody comes out and says, we're almost ready to sign the deal or something like that, everything could change very, very quickly. But right now, the VIX is, in fact, we ought to look at the VIX because it's starting to get some strength here. And the VIX has been going up, or trying to go up for the last couple of days. It's been making some rally attempts. And
yeah, hang on, I'll bring it up, John. Hang on,
okay.
Just give me a second. Just give me 1 second. Okay, all right, now we're ready. All right, the VIX. You want the street VIX? Just VIX?
the TVIX, I think.
TVIX. There we go. That's a daily.
Yeah, you see it is turning a little bit here. And you got to be pretty careful of that. It's coming up pretty rapidly here. Something's going on. Starting to make new lows on the day. That's a bad sign. Now the metals are starting to jump. The VIX is jumping. So if you let's have a look at maybe the 30 minutes on the VIX.
30-minute coming up. Okay. There we go.
Yeah, it's kind of, you see, it's sort of like when this kind of a pattern, you've got that gap. I was looking at that gap yesterday. If we close anywhere between here and 760 today, or 780 or higher, 760, and then we gap up tomorrow, you'd probably want to be long that thing, because it could mean the beginning of a bit of, it's been beaten up for a long time. And when the VIX, the VIX has pivoted here in the last couple of days, and sometimes a bottom like this can lead to a big move. So,
wow, look at this thing jump, John.
Yeah, no, it's really going.
All right, let's take a peek at gold. Okay.
Yeah.
Now, if gold could take out this trend line, let's see.
And the ES just dropped through the weekly trading zone below us.
Yeah, I bailed early on that thing. Oh well, never complain about that. Gold takes out this trend line. Now this is a 30-minute chart, so I mean, it could just, if it takes out this trend line, it could just dash right up. I don't see real, carved in stone obstacles here. Hey, there'll be some resistance, but hey, this is a key area. And so, does anybody have any notes? Michael, do you see anything on the news feed?
I don't see anything on the news, but
Man,
there is some good activity right here.
how in the world?
And my recommendation was to buy puts on crude oil earlier today. I think it's going to get down to 55.32 is what I think. And I mean, we'll see, but when I said it,
My goodness, we said 3101.
yeah.
Okay. Hey, but you know what? I did the right thing, and so I'm not going to cry over silliness. We knew that the weekly trading zone could be good support. And so since I'm trying to talk here on the radio and have a conversation with you guys, and, I did the right thing. I took profit at the zone in the store. Now I'll just sit here and weep as it continues to drop. No, I'm kidding. I won't. Not really. Not much. Honey, can I get a Kleenex? Thanks. Okay. All right, John, where do we go from here?
Well, boy, we're in for, what have we done? 670 points now, and then this is a very
This
bad.
is big. Yeah. In fact, let's take a peek at the NQ. Whoa. I've been waiting on that for days. Days, I tell you. Oh, well. Let's look at the NQ. Gems, crickets. Look at that. Okay, I'm not sure if these are current zones or not. We're at 8263. The next zone below is 8230. 8230/31. Current this week's zone. So 8230. 8231. All right, that's close enough. So that's it down there, guys. And
Oh,
if
we
you look
went right.
left,
Our VIX went right through that gap already. It's up to 17. So
all right, let me go back to the VIX.
oh, we're not there yet.
No, not yet. Yeah. In fact, that's right. That's where it ran into trouble. But you're right. if we can get above that.
Yeah. Sorry, I was looking at the UV. Look at the UVXY. See if it looks different.
All right. UVXY or I?
Yeah. Why?
UVXY. Okay.
Yeah, it's the same. So it's right up there to that
Well,
gap.
now this one actually poked up into the gap.
Yeah.
About halfway.
Yeah. We're starting to rebound a little bit off this low.
Now the S&P low looks like 3096. Now the next weekly zone below the S&P right now, current weekly zone is 85/86.
Karen just put up some financial news. The China trade deal might not be done this year.
Oh, that's what it is, huh?
Yeah.
All right, so from 3104. Now this was a last week zone right here, guys. But that zone doesn't exist this week. But see the benefit of having that information? I'm not suggesting you put 2-3 weeks worth of lines on your chart because that gets confusing and distracting. But having a little notepad somewhere and just being aware, well, you don't have to explain it, you see it. So this week from 3104.05, the next zone below 85.86. So here we go. Okay. All right. So that's what the Dow looks like in Q. Russell. It's like Russell got the memo first.
Yeah, Dwayne.
Dow.
Dwayne, both the Nasdaq gave a better sell signal that I was referring to.
Right. Okay. Here's the
To
Nasdaq.
be careful of, and but both of them have this was a pretty strong. Just shows you it was a classic 2 feet up in the air and bang, so it was a pretty good risk reward.
Okay. So if that's all it is, if they simply said that the trade agreement's been delayed, that's calmer heads will prevail here in a bit, and the sell-off will possibly turn into just a buying opportunity.
Yeah, we yesterday afternoon there was a similar kind of a sell. So it's this is when the market is coming off the highs, it tends to not give up the highs too easily. It has a habit of rallying first, which is we rallied a bit yesterday and then we gave it up going into the afternoon, into the close. Came down overnight, had another rally, gave it up, and now we're kind of now remember what has happened before is the shock horror, the reaction to the and so much for the Russell being up as much as it was. It's gone sharply negative again today. But what happens is what has happened is you get a couple of days of down, and then it picks up again. And next week we'll be getting into the pre-Thanksgiving. Unlike last year, which was Thanksgiving was a rout, we could still be looking at a kind of an opposite type of thing. But given already we've lost some, we've given up some ground on the VIX, coming back a bit. But if we go higher, I think if the VIX goes out near the highs today, that would be, probably mean there's some further to go down during the night. Or overnight going into tomorrow, and how we end this week is pretty important too,
Right.
So the rest of just a couple of stocks to look at. Remember, we've been very bullish on Keys, KEYS, which is a 5G deal.
KEYS, okay.
Yeah.
Got it. Remember daily?
Yeah, it got up to 110 today, and we were looking at that at about 103 the other day.
That's right.
We
Good
called
call.
it
Yep.
down 90s. QRVO still looks pretty strong.
Okay.
And Target might look at TGT.
They had some good numbers today, right?
Yeah, have a look at it. It's pretty awesome.
Yeah.
Pretty.
Look at that.
Man, right. That's a classic, quarterly. When you get a quarterly gap up, like in August, September, and then you get another one. This is a very strong situation. They're doing an incredible job. Target new all-time highs. Put up HD. Have a look at Home Depot. See what it looks like.
Okay. HD.
Yeah.
There we go. Now, they missed their numbers yesterday and changed their guidance going forward.
Yeah. So that's hurting the Dow again today. So, actually, we had a very mixed market. I mentioned the transportations earlier on. They're after getting up as high as, actually, we should look at the transports, TRAN, or just see how
let's
they
see
look.
what kind of symbol I need. I think mine's DYTO. Yeah, let me try that, DYTO. I'm remembering it wrong. Maybe it's DTYO. DTYO. Nope. All right. Come on, Dwayne. Dow. Transports. DTYO. Okay. Here's the index on a daily.
Is that at the end of close day?
No, that appears to be live real time.
Okay. No, I think it's must be delayed because they're right on the lows.
Okay, because typically it shows me up here in the corner if I have a delayed feed. Let me just see this. Some reason it's not showing that, I guess.
Notice how this thing topped out like got to 11.2. Yeah, it's kind of like a double top. That's a kind of a dangerous thing, actually, Dwayne.
That's weekly. This is weekly now.
Yeah.
I just switched. You could argue triple top here.
Yeah. Well, if it's a triple top, that's kind of a positive because it implies that we might have a pullback here and then get the energy to go up through it.
Right.
I think getting up above that would be very positive. But right now, it's we're down about 120 on the transport, so that's the equivalent of about a 300 point move down on the Dow. So it's kind of a, and now we look at the VIX is going back up again already. So this is really a kind of a serious move that's going on today. And oh, the dollar is tanking as well. Oh, excuse me, sorry, I misread. It's not no, it's still up pretty strong. Sorry about that.
Hang on, I'll go to the dollar in just a second.
I got the dollar. I got the dollar in the wrong place from the previous machine. That's why I misread it just now. Gonna have to fix that.
What just happened? Okay, I'm sorry. What did you want me to go to now? Say again.
The dollar.
DXY. Okay. There we go. DXY. Oh, that's a weekly. Let me go to a daily. There we are. Big old head, shoulder. That's maybe stretching it a bit, but there's certainly a neckline across there. And every reason to believe that this thing, just like on this leg and retracement, we found buyers, and on this leg and retracement, we found buyers. So, buyers come in here. There's an obstacle. So what do you think? Is this just looking weak to you, strong, or too early to tell?
If that fails, the lows of today fail, or the lows of yesterday, and starts a new leg down, then I would consider that to be pretty weak, and that may be what lies ahead.
All right, where do you want to go from here?
Boy, this is a bit of a rout. I think this is by the way, I noticed this morning, I didn't mention this earlier, that the SOX semiconductors was leading the way down. And remember what I said yesterday about the semis? They can just, maybe you ought to look at them, SOXL. They can go from hot to not, just like in a heartbeat.
SOX, SOXL, okay.
Yeah, that's actually a very bad development, because if we gap down now, we have a potential island top there, the whole month of November, in fact. So this is a really troubling development.
Okay. All right.
Okay, well, listen, thanks for the
Thank you, John.
invite.
We'll catch you
We'll
tomorrow.
catch you tomorrow.
All right.
Okay.
All right. Hey guys, I'm going to take a 5-minute break. I'll be right back. real quick, okay? Just going to breeze through them. I already gave you a chance to grab a screenshot. We already talked about the S&P. Covered that. The trigger last night, 3108. Triggered once, triggered twice, and it just triggered a third time. Important prices, important areas are almost always tested. Okay? All right. On the Dow. Last night, consider being short, 27,805. 27,805. Okay. So there's the initial drop down to 762. 40 points. Back above the trigger, another 40. Back above the trigger. And now we've gone from basically 800. That's about 150 right here. This trigger, 150 points, $750 per contract traded. On the Russell, it said to consider being short, 1593. We've already done 10 points on this last trigger. Go, baby, go. All right. On gold, we said to consider being short, 1466. Haven't touched that. Or be long, 1478. We made it up to 79. $100 per contract traded. That's all that was offered there. In Q, consider being short, 83.18. We're almost to 82.18. That's 100 points. At $20 a point, you're looking at a $2,000 per contract move. $2,000 per contract. If you've earned the right to trade 10 contracts, and you should never trade 10, or even 2, or even 1 unless you've earned the right to, it's a $20,000 move. Okay? Can't stress it enough. No matter if you get your education with us or someone else, I don't care what anybody else ever tells you. Do not go live until you're consistently profitable and never add a second contract, or a third or a fourth, unless you're able to add it with profit you earn in the market. Until you can do that, you either stay with just one or you stay in sim. If you want to learn how to trade for a living, it's just how you got to do it. Okay, one more here. Crude. What do we got? Crude, we said considering long, 56.20. We just hit 57.20. That's $1,000 per contract move. $1,000 per contract. Okay. All right. Let me see if I have a recap here on logic. I do. Up through the start of the show today. Thank you, Valerie. Week 68. 26 total alerts issued. 1 never triggered. 3 still in the works. 22 actionable alerts. 2 of them have been stopped out. 9% of actionable alerts this week, Logic 247, have been stopped out. We average 20% a week. Okay? All right. Good word for the day. Coming up. We began a discussion yesterday about finishing strong in ministry. Because if you let it, ministry will suck the life out of you. And it's supposed to give you life so that you can give life to others. So this is really important. 2 Corinthians 11:28. I face the daily pressure of my concern for all the churches. Over 50% of church leaders leave the ministry. Let's look at another reason why, other than the ones we discussed yesterday. They love people, but can't handle the pressure. We like to talk about the power of the New Testament church, but what about its problems? The church is made up of human beings, and human beings have unresolved issues. The New Testament church had moral problems, number 1, in 1 Corinthians 5:1. We read of a man sleeping with his stepmother, and nobody in the church seemed particularly upset about it. Number 2, doctrinal problems. See Acts 15. Some Jewish converts thought the Gentile converts needed to be circumcised. The dispute became so heated that it almost split the church down the middle. Number 3, immaturity and personality-itis problems. Paul writes, 1 Corinthians 3, I could not address you as people who live by the Spirit, but as people who are still worldly, mere infants in Christ. I gave you milk, not solid food, for you are not yet ready for it. For since there is jealousy and quarreling among you, are you not worldly? When one says, I follow Paul, and another, I follow Apollos, are you not mere human beings? He goes on to say in 2 Timothy 4, Demas has forsaken me, having loved this present world. And then he adds, Alexander the coppersmith did me much evil. So friends, if you're a church leader or a leader in any type of ministry, here's the bottom line. If you can't feel the pain, you can't heal the pain. Hidden in your everyday problems and people pressures, you'll find the wisdom to minister effectively. So don't get discouraged. You can't do it on your own strength and your own power, so don't even try. But if you turn to Him, all things are possible. And that's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.